G'day folks, welcome back to another update on the 25th of July 2024. We're looking at the S&P 500, the NASDAQ, the Japanese Nikkei and the GermanDax. And the US markets have dropped slightly since our last update, but the Euro markets are pretty much flat. Now, before you go any further, make sure you hit that like and subscribe button and support us more on the Patreon page where we look at bullish and bearish shares. This is our heat map. You can see here on the bottom left, I've got the various instruments we're going to look at today, and they're still predominantly long on the monthly. Again, this is based on the CCI 150 moving averages as a trend indicator, but on the weekly and the daily, they're all slowly moving towards bearish momentum. So we might see, as soon as we start getting a bearish movement on the monthly as well, then we're going to consider this a bear market moving into it. So first, looking at the S&P 500 on the monthly, it's still above its moving averages on the CCI down here, and that's giving us a bullish signal. But notice we do also have between lower highs there on the CCI versus higher highs on the price, and that's a bearish divergence. So just be mindful of a pullback at some point. On the weekly, likewise, where I've got it's broken below the moving averages of the CCI, and it's potentially a start of a slight drop or a retrace. And we've also got a bearish divergence versus high highs on the price. And these divergences on the monthly and the weekly are independent, by the way. And on the daily, it's also broken below the moving averages, giving us a bearish signal. You can see the price falling off. And we've got a target area there, and it goes between that Fibonacci low to that high, and that's that 23.38% Fibonacci retrace. That's a minimum pullback we expect, and 90% of the time it does hit this little minimum target, and sometimes it can actually fall a lot further. Now, first things first, we don't want to project too much, but we're not suggesting it's going to be a collapse in the market. We're just saying it's expecting a bit of a pullback at some point. Now, we did have another pullback here. You can see there we had a bearish divergence versus high highs on the price, and that also pulled back. And if I draw a Fibonacci on that one, between that high, you can see the 23.38% touched it and then bounced. So of course, this can still do the same thing. This can actually touch this range and bounce, or if it breaks through that, then we're going to see we're going to start measuring different Fibonacci levels and where it may stop. And this is the next support level below that to look out for. If we look at the hourly chart with the daily as a reference, we only take short trades based on the CCI below its moving average, so predominantly short trades only. And that would have been effective from the 18th of July, which was about this area here. There's another Fibonacci retrace level. You can see there we had a bullish divergence, higher lows on the CCI versus lower lows on the price. That was before our last video. We projected that target. You can see there it broke through that and went as high as a 50% level and then bounced down again. So we currently showing no divergence at the moment, but that was effective back then. So again, going back to this, we're taking only short trades, and where those indicated by those arrows, let me just delete that Fibonacci, indicated by those red arrows, you'd be taking short trades, and if you're following that as well, you'd still be in a short position at the moment. Now, you could have taken exits when it broke in the moving average of the CCI, if you want to be really conservative, or if you're following the moving average range on the price chart, you'd probably want to take profits when it breaks into that moving average range in the next couple of hours, possibly. Looking at the GermanDax, we do have a bearish divergence here versus high highs on the price, and that's been relentlessly rising over the months, and you can see that's been a divergence happening over the last, since about 2015 it seems, so it's a long-term divergence. So just be careful of a pullback at some point. Now here we've got the weekly, and that's also showing different divergence. The first one here it pulled back, and we've got a secondary divergence playing out at the moment. This is going to be a longer term one. So notice there as well, it's broken below the moving average range, giving us a bearish signal. So don't take long trades if you're trading on the daily time frame. And here on the daily chart, we've got another bearish divergence, and that's already hit its target. We had one back here, hit its target, bounced, and we've got another one here, it hit its target and bounced as well. But notice it's actually come close to bouncing off this resistance 18,936 a second time. So the next level of support will be this level down here at 17,949. It's already hit that. If it breaks below that, that'll be the next level of support. But at the moment, taking short trades only if you're trading on the daily, because the weekly is also short. Looking at the 1 hour chart, again using the daily as a reference, taking only short trades, you'd be taking that short trade there would have been your last trade to make, and you'd still be in the trade at the moment. Now again, if you're really conservative, you may want to take your profits when it hits the moving average range of the CCI, or if you want to follow and track the price down, take your profits when that price breaks into that moving average range on the price chart. Next, we look at the Japanese Nikkei. Now, there's no divergence on the Nikkei, but you can see there on the monthly, it's still bullish, although it's coming back towards the moving average range. That's also taking new highs. On the weekly, we did have a bearish divergence here, and that's still in play. It looks like it's starting to play out at the moment. We did draw this Fibonacci range, and this is the 23.38% target, and it looks like it may be coming back towards that target in the coming days or weeks. But at the moment, you'll notice on the weekly, it's broken below the moving average range of the CCI. And on the daily, we did have another bearish divergence here versus highs on the price. There's hit a divergence there one time, and it's already hit this second divergence we projected in our last video. And that's with that massive drop we saw in the last few days. And again, on the daily, it's bearish, a pretty strong bearish signal on the daily. Now, if you go to the hourly chart, again, only taking short trades from about the 17th of July, you can see there those short trades would have been profitable. We had a bullish divergence here. It actually, very minor bullish movement. It came close to hitting our target area. Looks like it just missed it. So again, that's one of the 10% chances of failures we get. But in this case, the price is still falling, and that no longer, you could argue that's a double bottom on the CCI. I still consider those bullish divergence. So you might see a bounce. But if you're trading short on this one, you could take the profits when it breaks in that moving average range on the CCI. Or if you follow it, you may want to take your profits if it breaks into that moving average range of the price chart. So the NASDAQ has had some pretty strong movement to the upside as well. This is the monthly. Notice it's still bullish on the CCI and also still rising. But notice we've drawn this Fibonacci. We've got a bearish divergence, lower highs on the CCI versus higher highs on the price. And we've drawn a target area, 23.38% level of that Fibonacci range. And we'll keep that in there in the coming days and weeks to see if it's going to be hit. On the weekly, it's actually broken into the neutral range of the CCI. So it's currently in that moving average range, giving us a neutral signal. And we did have a bearish divergence here, still playing versus high highs in the price. And we've drawn a target area for that. And again, these divergence on the various time frames are independent. They're not necessarily aligned. And here on the daily, it's broken below the moving average range, giving us a bearish signal if you're trading on the intraday. And you can see there, it's actually had some pretty strong declines in the last few days. And that's also hit our 23.38% target range based on that divergence, bearish divergence versus higher highs on the price after hitting that resistance at 27.60. And it looks like it's now approaching the 50% level. So if you're trading on the intraday, looking at the 1 hour chart as an example, using the daily as a reference, only taking short trades. So you can see there those short positions would still be in the trade today. If you're trading with the CCI, you'd probably be closing out the position now. Or if you're tracking against the price chart, wait till that breaks into that moving average range in the coming hours. We did have a bullish divergence here. You can see there it hit that 23.38% target range and then bounced to the downside. So hopefully you got value out of the video. Hit that like and subscribe button. Support us more on the Patreon page, and see you in the next video. Thanks for watching.